Greetings, members, one and all of the Salivation Nation. Two big banks predicting higher gold and silver prices. Let's explore. Indeed, usually when we hear about the big banks making predictions like this, we take them for a grain of salt, and I would encourage you to do the same with these predictions. A lot of times they're often wrong about what they predict prices are going to be. They were wrong in previous years. But there's only one big bank that is predicting lower prices, at least one that I know of, and that is J.P. Morgan, one of the bigger banks, the biggest bank here in the United States of America. But there's two other big banks that were predicting higher gold and silver prices. You know what we usually do is we say, whatever the big banks predict, do the opposite. In other words, if they think the prices are going to be low for gold and silver, it's probably a good time to buy gold and silver. And maybe they are following that same mantra. If they're going to predicting higher gold and silver prices, maybe we shouldn't buy. But the reverse psychology could be what they're going after. But I kind of doubt it, because one of these big banks may have had something to do with the big spike in silver futures that we talked about previous week. Some whale bought a bunch of silver, but more than likely it was paper silver. And never well could have been one of these banks. I'm going to be referencing an article here from goldeagle.com that talks about what has been happening in several different sectors in the precious metals space here, especially talking about the weakness that we've been seeing over the past week or so. Silver down over 7.5%, and it's a volatile factor of 3 times the price of the drop of gold, which is something we usually see. Volatility is a regular thing, especially for silver, and make no mistake, gold has been pretty volatile too, but it really has held its own, especially in comparison to gold, in comparison to silver and other commodities. Gold extended losses after falling the most in 2 months, as a more hawkish than expected U.S. Federal Reserve underscored the central bank's aggressive approach to tackling inflation. Stronger U.S. dollar pressured bullion, which plunged 1.5% in the middle of last week, as Fed Chair Jerome Powell did not rule out raising interest rates at every meeting to rein in the fastest inflation in a generation. You think about it, really, if you measure a generation by 20 years, it's 2 generations. But Jerome Powell was not very committal. He did not commit to anything in his speech. Likely, possibly, where, he's giving himself a lot of wiggle room, which means that we don't know where the economy is going to go, which means that there could be a lot of bad things that could happen, probably more bad than good, even though there's been some promising numbers on the economic front in terms of return to work and that leads us to low unemployment, higher than expected GDP numbers too. But you think about it, that's because people are clamoring for goods and services that have been basically shut down from this supply chain issue due to the coronavirus. And so we look at what's happening here in other parts of the world, and we see that there is definitely some issues that could be bullish for gold and silver. Now let's talk about one of these two banks that is predicting some pretty high prices or higher prices for gold and silver coming, but especially other metals too and other resources, and that is the Bank of America. They are bullish on uranium, aluminum, nickel, silver, and gold for 2022. Cost inflation for the miners in 2022 is real. And that's just it, folks. Inflation does not just affect the CPI measured areas of the economy. There's a lot of different factors that are out there. A lot of it is fuel, and just the cost of production is going to go up. Bank of America finds those with volume growth tend to be shielded from cost inflation, and that per unit costs are expected to decline despite higher absolute costs, thus protecting margins. Free cash flow for the group's coverage is forecast to rise 69%. And so that we'll see what happens. But the thing is these bigger companies and these big mining companies, they have some inflation, but it will be real. It's going to, especially, there's only so much that these miners can take before it hits them too, which means it's going to probably reflect in various different ways and cascade all the way down to higher gold and silver prices. Despite the negative action around gold over the past week, and it's still low as I record this video, Goldman Sachs is the other bank, big bank, raised its 12-month target for the yellow metal on expectations of slower growth, a rebound in emerging markets, and higher inflation. Inflation is the common factor between these two banks' predictions of where gold and silver prices are going to go, and other commodities too. But their expectations are now $2,150 an ounce versus $2,000 an ounce. So they were still pretty bullish before they revised up at the beginning of the year. Contrary to conventional opinion, gold prices tend to go up when the Fed is raising interest rates. So we'll see. We'll see how this plays out. A lot of retail money allocated to gold stocks held by passive ETFs. We know there's been a great number of ETF money going into ETFs. We've seen the silver futures, and some speculate that maybe Bank of America was the big whale that bought those. But we'll see. New cash allocations are just proportionally allocated to the same names. It's creating a field day for royalty companies to currently be the sole providers of risk capital to structure royalties into streams with companies that need cash flow. You've heard me talk about royalty companies here too. Some recent deals involve placing a royalty and stream on the same asset. If gold continues to move higher over the year with raising rates and passive money moves over to actively managed mutual funds, a significant amount of value could be unlocked. And so they are positioning themselves for sure, and I think some of these big banks are capitalizing on this and taking notice. Plus, you have some interesting things happening in some other gold mines around the world, and both gold and silver. And so I believe that's all weighing in on some of their decisions that are coming into play here. I have yet to produce a video of my gold and silver predictions. I probably should do that soon, as the month of January is now gone. So I will be soon. But nonetheless, I was completely wrong on both metals last year when I made predictions. So the predictions I give this year, just like last year, and as I warned at the very beginning, should not be taken seriously. It's just my opinion. And but it's fun to guess, and that's how I look at it, as an exercise of just making a guess based off of what I see happening in the markets. But nonetheless, it'll be interesting to see where things go with gold and silver. But two big banks are predicting higher gold and silver prices. And how about you? What are you predicting? I'm seeing now that gold and silver are dropping, especially silver. There are more and more people making lower price predictions. That is the psychology of the market. That's what happens. Whenever there is a downturn, especially through several days, people tend to get nervous about prices. And that's what's happening now. I did a poll in a live stream recently that showed that talked about that. We saw people said, hey, if the price of silver is going to continue to fall, how low will it go? And there's some people that feel, as I do, that if it's going to fall, we don't see it going much below $20. But there is a growing contingent of those folks that believe it will go below $20 and break through that barrier again, much as what we had seen pre-pandemic. And that very well could be the case. I mean, you never know. I'm not ruling that out as a possibility. However, I will say that I am still bullish on gold and silver. and we'll see what they do. But I mean, silver is a metal that has frustrated people, but it has also excited buyers as well. There is still a very strong number of folks that when they see prices for silver fall, they are buying. And they may not necessarily be buying the coin that you see before you right now because of the very high premiums, and that is quite understandable, but they are buying, and they are looking at the deals and seeing it as an opportunity. And I'm one of those that sees that too as a buying opportunity when the prices go down. Gold is not quite as volatile. It has proven itself as a store of value, and it's dropped last year of 3.2% over the course of the year. It's still a little disappointing, but that's 1 year compared to a track record where gold has, over the course of a long stretch of time, has far outperformed many other asset classes out there. And I referenced that in a previous video too about gold's performance compared to the dollar. And it is quite profound to see that gold has done well and has certainly met its role as a store of value, beating inflation, in fact. And silver, though it has performed under inflation, at least according to some measures over the course of a period of time, it has still done better than the dollar. Still better than the dollar. And so and I think that's something to be said, because you think about it, what is the dollar? The dollar is a debt-based instrument. It is a debt-based instrument that continues to certainly serve its role as a currency, but as a debt-based instrument, and by design under the Federal Reserve Act of 1913, and what they do, the Federal Reserve, it just essentially manages the decline of the dollar. That's what they do. They manage the decline of the dollar. And the dollar is essentially unsound money. It is money. It is a store of value. It is obviously has all the attributes of money, but it is a store of value that is decreasing each year. And so therefore it's good to diversify into assets that maintain their value, and that's what gold and silver do. However, obviously, when the price drops, per year for both these metals to some extent, it's hard to make that case. But nonetheless, when you take a look at it again through the lens of history, and not just picking apart a couple of different dates and because you can do that with any asset class to make anything look good or anything look bad. Whereas with the dollar, it's all bad, really. Essentially, that's really the bottom line. With the dollar, it's all bad. With gold and silver, sometimes it's bad. It just depends on when you buy and how you buy. In the end, you buy and hold as a store of value. That's what it's about. It's a savings account. So there you have it. Let me know what your thoughts are in the comment section below. These two big banks, that's Goldman Sachs and the Bank of America, are predicting higher gold and silver prices soon. We'll see what happens. A multitude of gratitude I want to extend to all of you, and I really do want to encourage you to please rate this video. Those thumbs up do count. They help out a lot. If I could get 25% of folks to thumb this video up, it would mean a great deal to me, because only about 10% of you thumb the video up as of the that I've noticed on the videos. And also share it on other platforms. Plenty of other platforms that you can share this video on. And comment, let me know what your thoughts are, and subscribe if you haven't done so already.